Are you tired of getting misinformation about trading? In this video, we're going to reveal the truth about what's really happening in the world of trading. From hidden secrets to shocking revelations, we'll dive deep into the realities of trading and separate fact from fiction. Whether you're a beginner or an experienced trader, this video is a must-watch to understand the true nature of the trading landscape. So, sit back, relax, and get ready to have your mind blown. I'm diving deep into the world of trading to uncover what's really happening behind the scenes, and I'm challenging myself to make sense of it all in just one day. Trading is often portrayed as a fast track to wealth, but the reality is much more complex. Successful trading demands a deep understanding of markets, technical skills, and strong emotional control. Many people start with high expectations, only to find that the process involves significant risks and potential losses. Profitable trading requires not just knowledge but consistent discipline. It's a game of probabilities, where even the best strategies can lead to losses. Successful traders are those who manage risks effectively, knowing when to cut losses and protect gains. Unlike popular belief, most traders do not become wealthy overnight, they build wealth gradually, honing their skills and learning from each trade. The psychological demands of trading are as intense as the technical ones. Emotional reactions to losses or wins can cloud judgment and lead to poor decisions. Experienced traders understand the need to keep a clear mind, focusing on their strategy rather than reacting impulsively. Without strong mental discipline, even the best strategies can fail. Trading is accessible to everyone, but not everyone will succeed. It's a skill that takes time, practice, and resilience to develop. For those who are willing to put in the effort, the rewards can be significant, but only with realistic expectations and a willingness to learn from both success and failure. Traders face a range of challenges, with two of the biggest being emotional decision-making and misinformation within the trading community. These factors can significantly impact a trader's success, often leading to poor decision-making and financial losses. Emotional decision-making is a hurdle for even the most seasoned traders. Markets are unpredictable, and unexpected shifts can trigger intense reactions like fear, greed, and frustration. When traders let emotions drive their decisions, they may abandon carefully planned strategies, taking impulsive risks or holding on to losing positions in the hope that the market will turn around. This emotional volatility often undermines consistent trading performance. Experienced traders work to minimize these reactions, using methods like predefined stop-loss orders, limiting trade size, or stepping away from the screen when volatility spikes. Misinformation is another major challenge in the trading world. Online forums, social media, and trading communities can be valuable resources for learning, but they also contain a lot of inaccurate advice and unfounded claims. Influencers or so-called experts may promote guaranteed strategies that promise quick profits, but such claims are often exaggerated or lack a solid foundation. This misinformation can lead new traders to adopt risky tactics without understanding the full consequences, potentially wiping out their investments. To navigate these challenges, traders need to develop a strong foundation in reliable market analysis techniques and critically evaluate the information they consume. By combining this knowledge with disciplined risk management and a calm approach to trading, traders can better withstand market fluctuations and avoid falling prey to misinformation. Delve into the factors that affect trading outcomes, including market psychology, risk management, and the importance of education and strategy. If you're enjoying this video and found it helpful, please give it a thumbs up and consider subscribing to the channel for more valuable trading tips and insights. Trading outcomes are influenced by several key factors, including market psychology, risk management, and the trader's level of education and strategy development. Understanding and mastering these elements is essential for any trader aiming to navigate the complexities of the market and achieve consistent results. Market psychology is a driving force behind price movements, as it reflects the collective sentiment and behavior of traders in response to events and trends. Markets often respond to fear, greed, and other emotions, creating volatility that can significantly impact asset prices. During moments of panic, prices can plummet as traders rush to sell, while periods of optimism can lead to rapid price increases as people buy in. Traders who understand market psychology can better anticipate these movements and avoid being swept up in emotional reactions, which often lead to costly decisions. Risk management is equally crucial, serving as a protective framework that helps traders minimize losses and safeguard their capital. No trading strategy is foolproof, so effective risk management ensures that losses remain manageable and do not jeopardize the trader's overall position. This can include setting stop-loss orders, limiting trade size, diversifying investments, and adhering to predefined risk-reward ratios. Consistent application of risk management strategies separates successful traders from those who may experience short-lived gains but suffer substantial losses in the long run. Education and strategy development are the foundation of successful trading. The financial markets are highly complex, with a range of factors, such as economic indicators, geopolitical events, and company performance, impacting price movements. Education provides traders with the tools to analyze these factors, interpret data, and develop well-informed strategies. A sound strategy allows traders to approach the market with a structured plan rather than relying on speculation or gut feelings. Regularly refining and adapting strategies based on market conditions and personal experience is also important, as what works in one market environment may fail in another. By recognizing the role of market psychology, employing robust risk management practices, and prioritizing education and strategic planning, traders position themselves to make more informed and rational decisions. This holistic approach ultimately enhances their ability to achieve consistent, long-term success in the markets. The crucial insight that separates successful traders from those who fail is a disciplined, well-researched approach that emphasizes consistency over quick profits. This disciplined mindset allows successful traders to avoid impulsive decisions and to stick with their strategy, regardless of the market's ups and downs. They treat trading as a long-term pursuit rather than a get-rich-quick scheme, understanding that sustainable success requires patience, analysis, and constant adaptation. Discipline is the cornerstone of this approach. Successful traders set clear rules and follow them strictly, whether it's cutting losses at a certain point, limiting position sizes, or adhering to a particular risk-to-reward ratio. This consistency protects them from emotional decision-making, which often leads to impulsive trades that ignore long-term objectives. Discipline also means they can control greed during profitable runs and resist the temptation to chase losses, allowing them to approach the market with a clear, level-headed perspective. A well-researched approach complements this discipline. Successful traders invest significant time and effort into analyzing markets, studying economic indicators, understanding patterns, and researching factors that might influence asset prices. They don't rely on luck or follow unverified advice. Instead, they build and refine strategies based on evidence and continuous learning. This commitment to research provides them with an edge, helping them make informed choices that align with their goals and risk tolerance. Ultimately, it's this blend of discipline and a research-driven approach that sets successful traders apart. Rather than reacting to the market's every movement, they remain grounded in their strategy, willing to adapt but never to abandon their principles. For them, success is the result of preparation, patience, and a relentless focus on improving their skills, a mindset that consistently leads to better outcomes over time. Trading requires a realistic understanding of the market, strong discipline, and a well-researched approach to succeed. Key factors influencing outcomes include mastering market psychology, implementing robust risk management, and continually educating oneself. Emotional decision-making and misinformation are common pitfalls that can lead to significant losses, so traders must stay level-headed and avoid acting on impulses or unverified advice. Successful traders differentiate themselves by treating trading as a long-term pursuit, consistently applying discipline to follow their strategies and focusing on calculated, informed decisions. By prioritizing these principles, they avoid the allure of quick profits and protect their capital, gradually building expertise and resilience in the markets. If you've had your own trading experiences, whether wins, losses, or lessons learned, feel free to share them in the comments. Your insights could help others on their journey as well. And if you're looking to dive deeper into trading strategies, tips, and insights, be sure to check out my other videos. Let's keep learning and growing together. For more tips and insights, make sure to watch the next video. It dives even deeper into the strategies that can help you level up your trading game. Don't miss out.